Good afternoon, everyone. Welcome to Picking an Oracle. I'm Kinji. I'm an enterprise analyst at Messari focusing on DeFi, and I'm accompanied by three Oracle experts here. So to my right, we have Jen from Chronicle Labs. They're the Oracle primarily focused on securing the Sky ecosystem, previously MakerDAO. We also have Matt from RedStone. So they are a leading Oracle provider in the LST, LRT landscape. And then we have Abhi from Douro Labs, who's focused on building Pyth. So the brief agenda that we'll get going today is just going over a high level, what is an Oracle? How do they differentiate? And then we'll move on to some more forward-looking questions in terms of growth opportunities and risks. But before we get started, I'm just going to assume someone out here has no idea what an Oracle is. They don't know what we're going to talk about. Jen, maybe I can pick on you. Can you just give us a 30-second overview of an Oracle and what they solve?
Sure. So essentially, an oracle is a transporter of information onto blockchains and into applications. So when we think about a smart contract, they're smart because they know how to operate within a particular blockchain, but they actually can't pull data from outside that blockchain by themselves. So they require infrastructure called an oracle to transport that data. Most of the time, it's crypto price data.
That's perfect. So when I'm kind of envisioning that answer you gave, I see something of like a data pipeline or a data workflow. And I think you can split that into three categories. So the first one is where do you actually source data? How is that data being provided? The second being what type of computation are you applying to that data to decide, okay, what's the actual output we're going to spit out? And then lastly, how are you propagating that data to the end users? So looking at that pipeline, I personally feel like those are also the areas you can best differentiate. So I'm curious how each of your projects, like where are you focused on and how do you view yourself as being differentiated? Maybe Abhi, we'll start with you and then move our way down.
Yeah, so Pyth optimizes for latency and performance. We saw the advent of faster, cheaper blockchains, and we wanted to design an oracle which works accordingly for that. Our data sources are actually first-party HFT firms or market makers themselves who trade these assets on exchanges and various venues and are able to provide the same quality and the same, low latency data straight to Pyth. That reduces a lot of friction. It reduces middlemen. It ensures accuracy and low latency of the data. So that's something very unique to the Pyth network.
Sure. So when it comes to RedStone, we do quite a lot of stuff when it comes to on-chain traded assets or exclusively traded or exclusively on-chain traded assets, specifically in the form of yield-bearing collateral for lending markets, things like LSTs, LRTs, Bitcoin LSTs as well. And oftentimes, a lot of these assets they're meant to be held, not really to be traded. So we sometimes also use those first-party providers like market makers, for example, or enterprise-grade data providers. But actually, most of our business is based on doing the price discovery with our proprietary technology on the liquidity pool level. So this is, okay, tell me the price of Lombard's LBTC on Uniswap right now, and check that price against the balancer pool, and then check that price against the curve pool. So a lot of price discovery is actually what we do as well with our tech as well, because that's probably the only possible way to create a safe price feed for assets that are not frequently traded. This can apply even to big assets like WrapState from Lido, just because there is periods of time where the trading volume is really low. So if we were to do volume-based pricing, this could get dangerous. Chainlink had gotten burned a couple of times because of that kind of methodology. So this is something that we optimize for specifically when it comes to yield-bearing collateral for lending markets.
Yeah, so our design principles really boil down to verifiability and transparency. And what I mean by that is an oracle shouldn't be able to, or a user of an oracle, whether it's a protocol. I'm going back to show the sun. Okay, too. Okay, I thought I heard a sound, but If you are looking at an Oracle price update, ETHUSD as a end consumer, such as a protocol or just a person wanting to know what the price of ETHUSD is, you should be able to understand how that price was derived, all the way down to the data sources used, data sources being the exchanges, both on-chain and off-chain, so centralized exchanges, decentralized exchanges, who the validators, who are the actors querying these data sources are, not just by a name, but like actually understand that these are well-known actors. And then also being able to see the signature that they signed with their private keys to say, I attest to this price. So Chronicle's design really kind of takes that whole process into a visualized format on our dashboard. So you don't have to be a developer. You don't need to be able to read code. You don't need to know somebody. You can just go in and look at our dashboard and see end to end how any particular price was derived from data sources to the output.
Okay, perfect. So I think we've got a pretty decent understanding of, okay, what is an oracle, and then different ways that each of you are differentiating. I kind of want to pivot the conversation a little bit to be a bit more forward-looking into what are some growth opportunities or some risks. I have a couple questions lined up. But the first one is, how are you servicing like a multi-chain future? So obviously we have a proliferation of different L1s, different L2s, roll-up ecosystems. All of those are going to require off-chain data at some point, so will require an oracle. I'm curious, what solutions are you creating to kind of service that future, whether it's multi-chain deployments, messaging protocols, or maybe your stack already supports that? Maybe Matt, we'll start with you and then we can snake around.
Sure. So the way we do it is, so RedStone is built in a very modular fashion. And I think this applies to all Gen 2 oracles. And I'm thinking about chaining as Gen 1 oracle at this point, and probably all of us here as Gen 2 oracles, which basically means that the infrastructure is set into a couple of compartments that can be mixed and matched. And there is a couple of services used to make all of this run smoothly. But in essence, how this works with RedStone is we've got something that's called data delivery layer, which is basically a decentralized cloud where all of our price feeds sit at all times. And then because of having this intra layer between the Oracle nodes and the actual blockchain, we are able to just plug and play this cloud to many, many blockchains. So it's fairly easy for us to launch on EVM chains, on non-EVM chains as well. But when it comes to non-EVMs, there's just a small piece of code that we have to adjust to a different VM, for example. But in the grand scheme of things, it's all the same price feeds that you can get on every single chain that we are deployed to, just because of that kind of modular design. And this also allows us to be very much present in the upcoming ecosystems. We optimize to be very much distributed across all the chains that matter, to be honest, when it comes to liquidity, when it comes to trading volume, when it comes to people building meaningful stuff on top of them. That's definitely something that we want to be present at. So that's what we optimize for.
Yeah, I can take this. So Pets today has more than 600 price feeds and supports over 80 blockchains. We support most of the major EVM L2s. We also support a lot of alt VMs, so like, Starknet or Fuel and so on and so forth. The way we designed it, in order to have an Oracle which functions at scale, we went for a hub and spoke model, which has been wildly successful for us. We run our own instance of a blockchain and app chain, which is a fork of Solana. So you have the full auditability and the verifiability of a blockchain, but you never have congestion issues because you're not sharing block space with anything else. Everything that happens at Pit happens on this app chain. And then this app chain is able to communicate with all the spokes, which are the various deployments on different blockchains. And a developer gets access to all feeds on all chains in a uniform, harmonious experience. So the DevX is pristine, and they're able to interact with Pitnet, the app chain, and request or pull any price update they want on demand. It's completely permissionless. We saw it coming. We believe in a multi-chain, multi-layered world, and we designed the Pith tech stack for that. It also means it is actually quite low maintenance because, being a permissionless smart contract, once it's deployed, it's pretty low touch after that. And developers don't even need to interact with the Pith team. And they can use us on any chain we are deployed on. Just go to the docs and you can use us. So it was a very different approach, but it's been widely successful for Pith.
Yeah, so our approach takes on a native chain deployment, design. So each chain that we're currently deployed on, which I believe is now 10, we have a native deployment with our architecture. And so the goal behind that is really to minimize any external dependencies in transporting data. So, while there are compromises on, kind of storage and like ability to connect to different chains very quickly in the case of, Pith, the strategy behind the native deployment really boils down to more of a security choice because, essentially we're just relying on that individual chain for constant uptime. And we also usually spin up our own RPC node in addition to like existing RPC nodes on that chain. Again, just to have additional redundancy in case there could be an outage, which there are, in the past we've seen with some RPC node providers. The goal is to really reduce any external trust dependencies on bridges, infrastructure, and just allow for that most direct ability to transport price updates to end consumers.
Sounds perfect. Sounds like I won't have any trouble getting off-chain data no matter what chain I go to. Abhi, you kind of mentioned just the push versus pull model just for a moment. It feels like in my mind, we're primarily moving to a pull-based model where applications are querying oracles for data when they demand it. Does anyone want to quickly just strongman the push versus pull argument? I think most people here are on the pull side, but correct me if I'm wrong.
We pioneered the pull model, so I'm definitely going to be speaking in favor of the pull model. It's easy to be an oracle for a limited set of feeds, for a limited set of chains. But if you want to do this at scale, you have to find a gas-efficient solution. You cannot be pushing 500 feeds on chain and spamming chains if nobody wants that data. The pull model allows the developer and gives the power to the developer actually to choose whatever they want. So it's like a buffet. Everything is available. You go to the counter, you choose what you want, and you bring it back to your table. And that kind of gives the power to the developer. They don't even need to talk to me or anybody, in the Pith team or the community about, how, can I have access to this? Can you launch this feed? It's all available. It's all permissionless. They pay gas when they need data instead of somebody else sponsoring gas costs and others free riding on the back of it. So that's why the pull model has been widely successful. Different apps also have different use cases. So you're not limiting yourself with what's available. You're actually able to build without worrying about data availability because it's always available. Those are some of the cases. And we've seen the success with perp dexes who love this because they're able to launch so many contracts. The moment a user trades, they're able to fetch the latest price and bring it on chain. And that's why Pith is the leader for, perpetual DEX volume. There are use cases where people want a push model instead of a pull, especially those who are used to doing, stuff in a different workflow, especially legacy apps. We have wrappers for that. So you can run a keeper bot. It's super easy. Again, permissionless. And you can convert Pith from pull to push if you want to do that. Again, we let the developers decide how they want to interact with Pith.
Perfect. So another forward-looking part that I want to look at is potential growth opportunities. So we kind of touched on multi-chain, but I think another one is this might be kind of hyperbole here, but a Cambrian explosion in different data types that are actually serviced by oracles. So I think if you look historically, it's been primarily pricing data that's been coming on chain, which is fantastic. We needed that. but we're starting to see the development of some new use cases that might need some different data sources. So I'm thinking prediction markets, perhaps some RWAs. Jen, I know Chronicle has done a lot of work on the RWA Oracle, so if you can maybe share some thoughts there. Then from the rest of the panel, I'm curious, what type of data do you see coming on chain in the near future that isn't pricing data?
Yeah. So RWAs have definitely solidified themselves, I think, in the last 12 months as real products that are going to continue to scale. And so Chronicle is essentially providing a service to token issuers who want to bring an asset that is, originating off chain. So a T-bill, any type of fixed income product or real estate product, you name it, and bring that on chain in a way that keeps the ethos of decentralization, or rather data integrity. And right now, we've been working with a handful of issuers who have, tokenized the fund and are looking to have verification that the value in that fund is what it is, and that is going to propagate on chain. So, and Oracle plays a really important role in being this neutral third party verifier to say, yes, I see this value in this custodian off chain, or this NAV administrator's value is what it says it is. And while there may just be that one source of data, it's an improvement upon just relying on that originator's kind of testament that the value is what the value is. So when you introduce an oracle, or so for example, the work we're doing with Chronicle to say, here we also see this is the amount of value in this custodian, you now can have ability to mint X amount of stable coins off of that and know that that is accurate, right? So that's, I think we're going to continue to see that scale beyond T-bills, and oracles are going to continue to play a really instrumental role in preserving data integrity and just eliminating that moral hazard of relying on a single issuer's word, for lack of a better word.
At Pith, we remain laser focused on DeFi because we believe that's the biggest piece of the puzzle. There is demand for other data types such as sports data, weather data, but I believe that's still in its infancy. When and if it grows to become something significant, I think we'll be ready for it. In terms of RWA, Pith Network has GTS, Virtue, Two Sigma, to name a few, who already provide data for US equities. We've got data for FX, commodities, and we're even going to have the US dollar interest rate curve right from 1 month to 30-year on chain at Pith. And this is possible because of the network of data providers. These are the biggest names in New York and in Chicago that you can think of who are part of the Pith network. We do see demand for other types of RWAs, such as the Biddle Fund with BlackRock and a couple others that Securitize and a few others are working on. Again, hot take, but I think it's still in its infancy, and we'll see how it grows. But we're keeping an eye on it, and we'll move accordingly.
But also I'd say, yes, there is new types of data coming online, or we see more demand for idiosyncratic types of data, but most of that is still price related. So this could be, for example, yes, the RWA example is quite prominent, that's for sure. But also when it comes to things like protocols built on top of Babylon, so the liquid staking for Bitcoin, this also requires a specific type of proof of reserve oracle, which is not specifically price, but more like, okay, tell me if the backing behind the asset that I hold on Ethereum mainnet is exactly one-to-one when you screen through the Bitcoin network and see the actual wallets that have the collateral in them. So it's not like price expressed in US dollars, it's more like a ratio of backing behind a specific asset. So could be called price, could be called proof of reserve, could be called backing oracle, however you want to call it, or like NAV oracle, net asset value oracle. This is kind of a similar use case to the RWA use case, with the only exception that this is purely on-chain. So all of the collateral is on-chain, but just in a different trust zone on a different ecosystem. So there is idiosyncratic use cases coming online like this. Some protocols also require some specific types of data for example, pricing the so when you deposit to a ERC-4626 vault, you get a confirmation of that deposit in the form of a token. And sometimes the pricing of this token, so the receipt of a deposit, is also required for the vault to stay intact, for example. This is also not exactly like a price in the classic form or a context of that word, but it's still related to the financial aspect of the underlying backing behind something that's either on-chain or off-chain. So I would say our focus as well stays within the DeFi region, whether this is staying purely on-chain with pure on-chain collateral, or going into the RWA space as well, tokenized asset, and just taking the price from off-chain, either from traditional markets or custodians or some other sources, and then presenting that price or an equivalent of price, a derivative of price, on-chain for DeFi protocols that are financial in nature to use.
Okay, that makes a lot of sense. So it kind of sounds like RWA data, that's what can be next in terms of new data types, and then moving forward to kind of having companion data pieces that you would accompany with price to have a more robust product. I think that sounds about right. One thing I want to lightly touch on, and we don't need to go too deep on this, but just is the concept of Oracle extracted value, or OEV. So Matt, I'm going to pick on you here. You gave some thoughts backstage on OEV that I thought were interesting. If you just want to give that 30-second talk, I'd love to hear it.
Right. So OEV is certainly an interesting concept, but yeah, as I said backstage, this is something like, you could call it basically the quantum theory of gravity, right? So we're getting more and more positive that this is solvable, and we are encouraged with the new research that comes online that says, yes, that this is potentially a direction that we should explore, but still we are very, very early on when it comes to exploring that particular concept. Once this is done and we've got the right approach to OEV, this could be a nice unlock of value, a nice revenue stream for both the Oracle and the lending markets or other protocols that create MEV in that form. But for now, it only makes sense for the biggest protocols that have really big chunks of money being liquidated at the same time, because that's exactly where the value is unlocked. So OEV is basically the MEV that's created at the Oracle update that causes a liquidation on a lending market or other type of protocol like CDP stablecoin, for example. So that's where the value is captured, and usually it is not captured by the protocol. It goes to searchers and bots. And the whole premise of OEV is, okay, how do we capture that value? So when you look at DEXs, for example, for lending markets or other types of DeFi protocols, this is the equivalent of capturing LVR, or the MEV that's created on the DEX level, and just trying to redistribute that to the liquidity providers, right? So that's exactly the same case for lending markets. How do we distribute this value back to token holders or people who just deposit money to lending markets? Maybe some of that could go also to the solution that actually captures that value, which is the Oracle provider. But still, for now, at the size of the market that we are right now, it makes sense probably for protocols like Aave, Compound, Venus, maybe Morpho. And that's basically it. Maybe there is 5-6 protocols in total that it really makes sense for, just because of the size of liquidations that are happening on these protocols. When it comes to the smaller protocols, this could potentially be an overkill for now. But still, I think the whole industry is trying to figure out what's the correct approach to it. There isn't that much value. I mean, the value is very substantial, but it's fairly spread out across the protocols. So if you wanted to capture all of it, you'd have to be plugged in pretty much everywhere, which might make sense, but probably not yet. So what I'm saying is very exploratory, very promising at the same time, but let's chat in 12 months, see how that works.
I think that makes a lot of sense. If that didn't make sense to anyone, RedStone has a couple OEV pieces on their blog, I know, that were really fantastic in getting me up to speed. So just want to shout that out. So we're coming up to about 5 minutes left here. And I really want to fast forward to like the very end state of oracles. And a question that I have in particular, which is, if you're looking 5 to 10 years down the line, do you expect there to be consolidation in the Oracle space? So is there going to be 1 or 2 major players that are servicing all the data? Is there a network effect there, or some sort of moat that comes from economies of scale? Or do you think that it is a diverse enough landscape where different oracles can serve different niches and each kind of capture their own little market? So I'm very curious, Abhi, if we want to start with you and then maybe move our way down.
Well, crypto 5 to 10 years is a long, long time, right? So it really, um, I mean, I think one of the things I would say is that we expect feature parity or technology to be at par between TradFi and DeFi. And we are seeing that already with much cheaper and faster blockchains. Oracles which will survive will be the ones who adapt to this new paradigm. We see the convergence happening between TradFi and DeFi. Um, if I do think there'll be multiple players because different requirements may require different oracles. I'm not sure if there'll be a winner takes all situation, but there would definitely be who's serving what use case and what's your priority. And as I said, like we believe there's gonna be, we are almost close to it. We're having feature parity, and we half a second doesn't cut it anymore. You have to go down to 10, 20 milliseconds. And that's the kind of latency that you need to target if you want to serve DeFi 3.0. And the oracles who do that will be the ones who survive.
Yeah, I would say the real timeness aspect of all of this is, I believe, a natural convergence. When you look, underneath what's happening underneath the ground near the New York Stock Exchange, all the biggest market maker firms, they've got their own hardware that's plugged in as close to the core servers of the exchange as possible to minimize the latency. So this is probably going to be, taking that feature parity premise as something given. Here, it's probably going to be similar when it comes to blockchains. So there is going to be things like Mega ETH with like 100,000 TPS and others who are just going to be trying to do DeFi in as much in real time as possible. So the Oracle will have to follow, that's for sure. But when it comes to how many of the protocols survive, I would say that the network effects are not that strong at this point when it comes to the Oracle business, because the main asset that you've got is reputation. But as we've seen with what happens with like chainlink's dominance in this space, it can really get, it can really shrink in really short time, just because, the incumbents just bootstrap this kind of reputation that's needed to cross the chasm. And once that's done, then you have to compete on features, then you have to compete on the speed of execution. So it kind of becomes commoditized in that sense. And also it becomes, okay, who's the best team when it comes to constantly keeping the product up to date, okay? So for me, it's not like a strong network effect as if, for example, social networks, right? It's not the same kind of a network effect. And also when it comes to cooperating with TradFi, oftentimes they don't really like to see the winner takes all kind of a situation in a smaller niche that they would like to jump into, okay? This is kind of, I would say, behind the scenes info, but there is some rumors in the TradFi space that, the TradFi players might be uncomfortable with some companies dominating a smaller space like crypto. They need choice. They need to see offers competing with each other. So I think this is also going to be a forcing function to have at least a couple of strong providers that are just going to feed the needs of those bigger players joining in.
Yeah, I think what we've learned and what's really interesting, we have an Oracle panel, which, doesn't actually include Chainlink. No, not to Chainlink, but you have first and foremost an Oracle panel at Messari. I don't think there was one dedicated to it last year specifically. And you have 3 different Oracle protocols that are, definitely, I would say, top on the list of market share behind Chainlink, right? And so there's even more Oracle protocols coming out. A lot of the VC funding this year has been in Oracle protocols. So there's clearly attention on them now, and the value of this like critical plumbing of DeFi is like kind of coming to light. And what's also coming to light is very specifically the differences in design, because all oracles are not the same. And looking under the hood, looking at how they're designed is a really big question builders should ask themselves. So I think it's a positive that there's been a shift in just one choice in oracles, right? Oracle diversity. is a part of like decentralizing the entire space, right? Because if we have one provider or just two providers for that matter, powering 90% of DeFi and one or two of those go out, well, that's kind of lights out for all the applications consuming them. So I think 5 years from now, next year from now, there could be like a little bit. Actually, I think there'll be more entrants into the Oracle space, but you'll continue to see a few kind of leading the pack in providing service and TVS simply because of features, cost, and also I hope for the most part because they have the most resilient tech underneath. And then I think beyond that, you'll start to see some niches, which you guys were touching on about specific types of data and how protocols can externalize a risk to oracles to inform, parameters on like liquidations, what type of assets those protocols support, and is kind of looking at like the Morpho and Euler models of integrating risk curators and the risk curators choosing oracles to kind of inform the risk parameters of certain markets.
Perfect. That sounds great. We've come up on time now. So before we just run off stage, do you all want to say where people can find you and learn more about the projects you're associated with?
Yeah, so chroniclelabs.org is our website. And if you want to look at the data end to end that I was referring to, you can just click on the dashboard and select any Oracle and see where that price came from the validators, their signatures to the data sources in real time.
When it comes to RedStone, you can just go to redstone.finance and you should find all the necessary info about that. Also in Twitter, that's redstone dash or like underscore. Yeah, redstone underscore DeFi. Not the best handle, but I'm sure you'll find it.
You can visit pith.network to know more about Pith. You can also go on our socials or Discord and Telegram, where we have a team of community managers who are ready to, interact with you and answer any questions you may have.
Perfect. Thanks, everyone.
Awesome.
Thank you.